Hello, it's your mortgage guy, Brandon Press here with a market update. It's been an interesting 2 weeks, right? Rates have been coming down, but I'm going to tell you why rates have been coming down. Last year, I did a video, and it's available on YouTube, that kind of talks about how mortgage rates relate to the behavior of the Fed. And a lot of people think there's a very strong correlation, and sometimes there is, but sometimes the behaviors are in the opposite directions, right? The mortgage companies anticipated things before the Fed acted, and then they shifted based on data changing soon after or while the Fed is behaving, right? And so a better tool to track what you think mortgage rates are going to do is to look at that 10-year treasury yield. And my video explains why, so go check it out. The things that would inform that 10-year treasury yield and mortgage rates very strongly at present: job numbers are not as strong as we thought they were. And the last few months have been rough, regardless of who's collecting the data. New data from March shows that March was not a good month. The year to date has not been that solid. And so unemployment is climbing. People who are getting jobs are declining. It's not the best from a job market standpoint. And that's one of the strong indicators of what mortgage rates are going to do. And then two, home buyers are not interested in buying homes. So there's more seller activity. We have a lot of active listings for the first time in years, a lot. But we do not have a lot of buyer activity. And so that affects mortgage demand. And so what you see is rates falling to account for lower mortgage demand. And so we saw hints of this 2 weeks ago when I did the video and talked about UWM's program, where they're offering 90 basis points to help you get a cheaper mortgage. Basically, they're giving you 90 basis points towards your mortgage being cheaper if you're doing a refi. And now we're seeing other lenders jump in on this trend that UWM predicted. UWM is a little bit more bullish on things, but if you watch NBA basketball, you know the Phoenix Suns owner, he's a little bit more bullish on when he makes a decision. He goes after it fully, even if it doesn't always work out, right? He's going to make a decision. He's going to go after it. And with UWM, it tends to work, and other lenders tend to follow. So you see this refinance wave hitting. If you have a rate that's over 7.25, I would reach out to somebody and see if you should refi for sure. If you have a government loan above 6.8, you have FHA, VA, USDA above 6.875, I would reach out, because you could save a whole percent on your mortgage at present point. If you did a refi, you could save well over 1%. So, and then these are kind of the rates I'm seeing from purchase rates at present point. Okay, so these are kind of middle of the market based on a 740 credit score, 3% down when it comes to the conventional FHA and USDA or VA, the conforming loans. And then when you look at a non-QM loan, like a DSCR loan, I mean, your 6.625 is wild for a DSCR considering the last 2 years, right? And so it's a pretty good market out there if you're looking to get a mortgage, whether it's a refi or purchase. If you have any questions, feel free to reach out to me. My website's right there. I hope that you have an awesome day. Take care.